Could you share the latest updates to your portfolio strategy? How have you adjusted your overall positioning recently?
It's very timely to have this conversation considering how volatile the US markets were during the month of April. I realize this is the end of May and things have tapered off a bit from the volatility standpoint. But what's very interesting about the KDVO is that as we entered March and April and May, it was much different than an index-based product because unlike an index, we have activity. We're an active manager. So if we go back to the beginning of April, which was before the intense volatility, we had a little bit higher cash position than perhaps we did this time last year because a lot of dividends had come into the portfolio and we had written more covered calls in the first quarter of 2025 than we had in 2024. So it gave us the opportunity when markets here in the US sold off in the beginning of April to put money to work. So we took money from cash that had been generated in the first quarter and we added to some of our positions like American Express, Caterpillar, Apple, Meta, the Facebook. And in so doing, we were able to buy, maybe not at the absolute low of April, but we sure were able to get in at very, very good opportunistic prices that when the market recovered, which it did in the latter part of April and here into May, those investments that we pushed into the portfolio have blossomed very, very nicely.
Given the recent uptick in market volatility, how are you navigating these conditions, particularly in light of tariff and trade policy concerns?
Yes, the trade and tariff policy concerns have certainly led to a great increase in volatility here in the US markets. And one of the best things about covered call strategies, and it's not unique just to KDVO, this benefits all of our peers and our competitors as well, is that covered call writing works best when we need it to most, in periods of volatility, in cascadingly down markets when vol spikes. The option premiums that we generate are much, much greater. The call premiums that we've seen here in KDVO in 2025 have been better than we saw through any time period in 2024 in the absence of volatility. So unlike a long-only strategy, when we have volatility, it really allows us to roll up our sleeves and lean into the covered call component, which there are instances, and 2024 was a good example, where you want to dial back on the call writing and not be as active there. So for us, that volatility is something we can embrace from the covered call perspective. And I think we did that, very, very actively here over the past several weeks. We can go back to 2000. During my career, anytime that we've seen massive volatility, 20% drawdowns in the US markets, when volatility spikes, it really helps us embrace that. And the call premiums become so much greater, which is to our benefit, certainly. But the thing that's very different about KDVO versus our peer group, and I'll focus on COVID and 2000 and 2022, and even this past April as three more recent examples, when the markets fall dramatically. And in those instances, those 3 years, we saw 20% plus drawdowns. In KDVO, we don't just write covered calls on everything. We don't write covered calls at the money. We don't write covered calls 5% systematically out of the money. Many of our peer group will do that, and the premiums will be very robust. However, if the market recovers, you miss that recovery. So you forfeit some upside. So the difference with KDVO is that when we sell those calls, instead of selling them at the money or 5% out of the money, we'll sell them further out of the money, still bringing in great premium, but allowing for, if the market recovers, we're able to participate in some of that recovery and hopefully, in a perfect world, most of that recovery.
this is the last question, but it's also very important question about the market outlook. So, what's your current view on the market, especially in terms of tariff, policy dynamics, and earning seasons?
Well, earnings season was a surprise, I think, and a surprise to the upside. The only problem with the most recent earnings season is that as good as and strong as it was, we were very unsure of guidance because US companies are also unsure of the clarity on tariffs. So they're a little careful about how they're guiding. What I look at is this week was a short week for us here in the US, but all the market seemed to care about really was how was NVIDIA's earnings going to turn out. And then people sort of sat back to digest things. May was a great month compared to April. The corporate earnings were very good. They need to be good next quarter. The economic data that came out here in the US was surprisingly good. The soft data, the sentiment in April was unbelievably bad, but the hard data, the actual economic reports, inclusive of ISM manufacturing, inclusive of the job reports, and most especially corporate earnings, and even the inflation numbers were pleasantly, surprisingly not bad. So I think that the landscape is somewhat positive for the rest of the year, even despite all of the uncertainty that we know will continue from a tariff perspective. There's a tax bill going through the US here that will be contentious, even though one party has more power than the other. But ultimately, what it will come down to is corporate earnings and inflation. And if inflation can continue to come down a little bit more here in the US, it'll give the Federal Reserve a green light to make a rate cut or two towards the end of the year. The markets will embrace that. I think that we're going to be range bound throughout the next few months, which is perfect for KDVO. Collect the dividends, write covered calls, and enjoy that income stream. But we'll be looking at 2026 earnings. We'll be looking for a Fed rate cut at the end of the year. And here in the US, there is still approximately $6 trillion sitting in money markets. And if those investors decide that they want to start putting money to work into the US market, that'll be another catalyst to lift it. So I think range bound, still very nervous, still very volatile. And that could be the case for the next 3 years. We have an administration that's not going away at the end of this year. But I think all of those factors really embrace the benefits of KDVO and will allow us to shine for those investors who have entrusted us with their money.
Okay. Thank you again for your time and insight. Is there anything else you'd like to share with our Korean investors and your fans?
Well, I don't know about my fans, but I am certainly so appreciative and grateful of all the trust and confidence. We're seeing more growth in the Korean market this year than we have in any other area. And we're so grateful for the partnership with Samsung and Kodex. And I look forward to our next conversation where we can.
Okay, thank you. I'm also just looking forward to meeting again. And also we just prepared your interviews every quarters, if you don't mind.
I'm looking forward to it. It's my pleasure, and I'm grateful for the partnership. 사랑해요, Kodex.
네, 지금까지 저희 삼성 코덱스 미국배당커버드콜액티브 ETF의 포트폴리오 자문을 맡고 있는 미국 CWB의 케빈 심슨과 만나보았습니다. 여러분 어떠셨나요? 미국에서 모닝스타 기준 5스타를 받고 있는 유명한 배당 전문 포트폴리오 매니저의 이야기를 들어보니까 저도 많은 인사이트를 얻는 시간이었습니다. 앞으로도 저희 케빈 심슨과의 인터뷰를 통해서 실시간으로 미국에서의 주요한 배당 전략은 무엇인지를 알아볼 수 있도록 저희가 잘 준비하도록 하겠습니다. 그럼 오늘은 여기까지 하도록 하겠습니다. 고맙습니다.